2024 is right around the corner, and you're asking the question, where do I put my money? What do I invest in? Well, when it comes to stocks, in this video, I'm going to break down exactly that. You came here for the truth, so let me unveil that for you. I'm going to give you some information today, some food for thought, and even if you're not an investor, you should pay attention to this because that's going to basically explain how the events will unfold in these coming months. There's a major event, in fact, and that would be interest rate cuts that are on the table in early 2024. That's not only going to affect the stock market, that's going to affect everything. And so I ask you, pay attention to this right here and now. Share this with those you think would find it valuable. And of course, I'm going to break down everything you need to know right here. Let's begin. What we're looking at right now in this video is an analysis that I did, providing some information to the GPT that I've created. So this looks up all past cycles and compares that to current data. And so when I do this, it's a lot more complicated than that, but essentially when I do this, it provides me with a report. The people that have access to this are part of my Finance Friday group. It's a live session that we do. They have access to this. And what we're able to determine through this is that, look, if this happened the last time, we can analyze why it happened. We can go through, get all of that data, which stocks perform the best, why they perform the best specifically in relation to what was happening during that time. And then we can kind of mirror that with the events we're experiencing today. And so in this example here, I pulled up the rate cuts, which is the expectation for 2024. And the last time we saw this, which would be after the financial crisis. While these events are different, certainly, there are some elements that are similar. And so during this period of 2008 and 2009, this is a critical historical reference when analyzing the impact of rate cuts on the financial markets. There was the global financial crisis, which to some degree we are experiencing right now, but not as significant. And that time, there was the housing bubble that started coming down. Major financial institutions were crashing. And then you had a severe economic downturn. So March 2023, there were banks that were failing like SVB. And these were, believe it or not, massive banks. But they managed to collapse them into other banks. They rescued them in a different way that we've seen before. But we can learn some things from that event and take that into account for 2024. The sectors that performed the best, well, technology did very well afterwards. Companies in the technology sector, especially those involved in software and services, showed resilience. This sector benefited from the continued innovation and demand for tech solutions. You saw that, many different companies. I'll give you some names in a second. Consumer staples. Companies in this sector typically sell essential products which remain in demand regardless of economic conditions, making them relatively recession-proof. It depends, of course. Even during 2020, after the big boom, we saw companies that were really in demand suddenly flip the other way because there's a lot of speculation behind these investments. Healthcare. The healthcare sector often remains stable during downturns due to the inelastic demand for healthcare services and products. You've got money that's being thrown there, billions and billions of dollars every year, regardless of the circumstance, right? Utilities tend to be stable due to their regulated nature and consistent demand, regardless of the economic conditions. People still need to use these things, so whether it's market going up, market going down, they can still have that demand. It doesn't mean that their stocks perform extremely well, even if the economy's down, but maybe they perform better than others. And then also, it's worth noting that gold and precious metals often are seen as a safe haven, and so they could receive the benefit of that if there's a crisis, if there's a major crisis. It's an important caveat. So the specific stocks for this, there's just a few names that I'll give you, and I'm not trying to give the financial advice. What I'm trying to explain is why they performed well. Well, Walmart happens to be one of those. A major retailer in the consumer staples sector, Walmart benefited from its focus on low priced goods, appealing to the consumers with tightened budgets. Today, we also have the dollar stores that will do well during these times. McDonald's, another consumer staple. McDonald's saw an increase in demand as consumers shifted towards more affordable dining options. Today, that's a little bit off. I mean, it's still a cheaper solution for people than other places, but you can see that the sandwiches are costing much more than they did during the financial crisis. Johnson & Johnson, a key player in the healthcare sector, Johnson & Johnson's diverse portfolio helped it to remain stable. Microsoft, a leading technology company, Microsoft continued to grow due to its strong product line and innovation. And since then, they have acquired, sort of acquired OpenAI. They have a very big stake in OpenAI. And that means for the future here, they've got a lot going for them. You got gold, of course, at the same time. While there might be suggestions of gold mining, I really think that when we're talking about gold, we have to stick with physical precious metals. That's the only one I would ever recommend. The others will trade like stocks versus actual precious metals. So their performance during this period, I mean, if you look at an example of Walmart, their stock rose 20% from 2008 to 2009. McDonald's actually increased 5.6% in 2008. Johnson & Johnson did well. Microsoft experienced a decline initially, recovered towards the end of 2009. And you got to understand, you got to look at it in comparison to the broad market, how these things do. Now, that's during the crisis timeframe. But think about the years following of all of these stocks performing extremely, extremely well. And that is what needs to be taken into account right here and now. If interest rates are cut, considering your scenario where we've got interest rates coming from this, 5%, 5.5% range coming down, you could have these sectors, which is the technology, consumer staples, healthcare, and utilities becoming attractive due to their relative stability and resilience in economic downturns. If it's a very big crisis, well, then gold, precious metals could be doing as good as well. And by the way, should I mention, gold at the time of this recording is around that $2,000 mark. So this is a significant time. And of course, other things have been outperforming it, but still doing quite well. And we're not even in a crisis at this point. So we'll keep an eye on that. Companies with strong fundamentals, diversified revenue streams, and a history of weathering economic downturns could be potential investment targets. You could see those companies like the Walmarts and the McDonald's, Johnson & Johnson, and Microsoft having that strong, potentially strong balance sheets. It depends on when you're watching this video, but those are something that I would pay attention to. You want that strength that's there. When you look at a company, you want growth. You want to know that this company has a long-term potential, but you also want stability, because especially if you are acquiring, if there's some difficulty, like if they're going to cut rates because, now we're admitting it's a recession. Well, there could be some instability at first. So you want to have the big names as part of your portfolio, because you know that any initial problems will then be, outgrown, let's say. You got to be careful during these times. It all depends on the circumstances at that given moment, but many have talked about a Fed rate cut in March. Only time will tell. You got to understand that during these periods, it's very difficult to predict what happens. But taking everything we know from these past cycles, which there are elements of 1970, there are even some elements of the exuberance experienced during the roaring 20s. We also have the dot-com boom. But what do we know? It's that at the end of it all, when they cut rates, inflation goes up, and that makes risk assets do better. Initially, usually what occurs is really dependent on what was hit the hardest. And so, for instance, banks and the housing, everything related to construction and housing and the financials really got hit hard during 2008. But there were some other companies that were very resilient. I mean, a lot of things were going down. Of course, people were worried, they were concerned. But it wasn't long before that trend started to reverse and people said, oh, you know what? I don't think these things are exposed to that. So I'm going to start putting my money there as a safe haven, take it out of this company. I'm not going to invest in, the financials. I'm going to take my money out of the banks and all of these different establishments, insurance companies. Okay, I'm going to take them out of there and I'm going to put them in here and there. And so that's the kind of thing that we need to understand. It will unfold dynamically. And so we need to pay attention to that. I'll bring you those videos as time goes on. But this explains what happened in the previous cycle, what we can learn from that cycle, and then how that could apply potentially to the one that we will experience here as we move into 2024. Again, this is from the GPT that I created, which compares all of the historical cycles before it, and it lumps them into different categories. So we will see that these different categories, it could be a, commodity situation like the 1970s. It could be a bubble like the tulip mania. It could be like the dot-com boom, and so on. Takes all of these different buckets and then it says, okay, what's going on today? So it does a search, finds out, okay, what's going on right now today? And then it compares it to all of those previous buckets. And then when it has that information, then it starts going into the report. It's a very interesting thing. And I just find it to be interesting the way that it is able to dissect this information. In addition to that, of course, I've read all of this, but it's nice to get these reports to be so concise like this, and I could bring that data to you. I hope you appreciated this. If you did, hit that thumbs up button. If you want to see something else, a comparison of something else, I can bring that information to you any day of the week. Okay, I hope you will be here tomorrow. Make sure to search The Money GPS, and you'll get my videos. I'll see you then. Take care.